Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you.
Fellow traders, welcome back to our channel. Let's do a quick market briefing and what to look for today. Investors seeking a distraction from the looming debt ceiling countdown clock turned their focus to the release of Federal Reserve meeting minutes and Nvidia's earnings report. However, concerns about the debt ceiling negotiations and their potential impact on the economy weighed on market sentiment. Pre-market trading on Wednesday saw major indexes resuming their decline, driven by media reports suggesting little progress in the debt ceiling negotiations in Washington, D.C. The business community's involvement in pressuring politicians to avert default remains uncertain. Bloomberg reported that the White House and House Republicans would resume debt ceiling discussions on the same day. The recent period of low volatility came to an end as fears surrounding the debt ceiling took center stage. The Cboe Volatility Index, VIX, often referred to as the Fear Index, jumped to 19.6, the highest level since May 5. Schwab's chief fixed income strategist, Kathy Jones, warned that a failure to resolve the debt ceiling issue could lead to another debt downgrade, a sharper rise in short-term rates, and a sell-off in risk assets, reminiscent of the 2011 debt ceiling standoff. The previous day's selling affected the information technology sector, which had been performing strongly. This could be an initial sign of potential repercussions if the deadlock persists. Defensive sectors of the market, seen as safe havens, fared better, highlighting investors' cautious approach. In other news, the 10-year Treasury note yield slipped 2 basis points to 3.67%, while the US dollar index climbed to 103.58. WTI crude oil rose to $74.04 per barrel following a larger-than-expected drop in U.S. supply and concerns about a possible OPEC output cut. Moving across the Atlantic, the United Kingdom experienced a decline in inflation last month to 8.7%, the lowest since March 2022, though still above analysts' expectations. Core inflation, excluding volatile components, actually rose to 6.8%, the highest level since 1992 and well above the Bank of England's 2% target. In the earnings spotlight, Nvidia, NVDA, was set to report its earnings, attracting considerable attention from investors. Despite a 21% revenue drop in its fiscal Q4, NVDA's shares had more than doubled in value this year. Analysts anticipated a similar year-over-year revenue decline and a significant earnings decline in fiscal Q1. The excitement surrounding artificial intelligence, AI, and NVDA's collaborations with prominent software and hardware companies like Microsoft and Dell had been driving the stock. Investors looked for updates on the impact of AI demand on the data center outlook, as well as the latest developments in the video gaming business. Other notable companies reporting earnings included Costco, Cost, Dollar Tree, DLTR, and Best Buy, BBY. DLTR, part of the discount retail sector that had outperformed the overall market, had seen its shares rise approximately 12% this year. In the previous quarter, DLTR exceeded analysts' expectations and provided optimistic revenue guidance for Q1. Cost, which experienced a decline in share prices since its peak in early February, showed signs of improvement in same-store sales for April. However, revenue fell short of expectations in the last earnings report. The performance of COST's private label food sales would be closely watched as consumers sought bargains. Kohl's, KSS, shares experienced a significant jump of over 12% in pre-market trading after the retailer surprised Wall Street by reporting a profit in its latest quarter. Although still below the 52-week high, some analysts considered this report as an indication of positive changes under a new CEO. Shares of vaccine makers Moderna, mRNA, and BioNTech, BNTX, surged over 8% on Tuesday following a warning from a senior health advisor in China about the Omicron variant XBB fueling a resurgence of COVID-19 cases in China. The advisor predicted 40 million infections per week. This news also had a positive impact on other publicly traded stocks in the COVID vaccine market, including Novavax, NVAX, Eli Lilly, LLY, and AstraZeneca, AZN. Turning attention to the Federal Reserve, the CME Fed Watch tool indicated a 65% chance of a pause in rate hikes at the upcoming June meeting. The release of the Federal Open Market Committee, FOMC, meeting minutes at 2 p.m. Eastern Time was eagerly anticipated as it might provide insight into the level of support for a potential rate hike pause among FOMC officials. Fed Governor Christopher Waller was scheduled to deliver a speech at 12:10 p.m. Eastern Time on the economic outlook. In April, Waller expressed a hawkish stance, emphasizing the need for further tightening of monetary policy due to strong labor market conditions and elevated inflation. Investors awaited his remarks to see if he echoed the more dovish tone expressed by Fed Chairman Jerome Powell last week or reiterated the previous hike-friendly sentiment voiced by other Fed officials earlier this week. Looking ahead, the second estimate for Q1 gross domestic product, GDP, would be released on Thursday, providing a comprehensive view of the economy. The initial estimate came in at 1.1%, and analysts did not anticipate significant changes in the second estimate. Friday's April personal consumption expenditures, PCE, prices reading, considered the Fed's preferred inflation gauge, was also eagerly awaited. Analysts expected a 0.3% increase in both headline and core PCE prices compared to the previous month. From a technical perspective, the S&P 500 registered index, SPX, faced resistance at the 4,200 level, failing to close above it despite multiple intraday attempts. The recent 1% drop in the SPX pushed it below the key range of 4,150 to 4,170, which had previously acted as a band of resistance. And that wraps up our market briefing for today. Overall, investors closely monitored the debt ceiling negotiations, the Federal Reserve's monetary policy stance, earnings reports from major companies like Nvidia, and key economic indicators to navigate the current market environment. As always, make sure to do your own research and analysis before making any investment decisions. Stay tuned to our channel for more updates, analysis, and insights into the exciting world of the stock market. Until next time, happy investing.